Now, like I said, primary asset tokenization platforms in APAC already exist. Cash were the ones that I mentioned just before with the gold, tokenized gold. InvestorX has done a very good job. They've actually tokenized the Bored Ape. This is not a physical asset, but it's an asset nonetheless. You see, like digitizing a digital asset in the first place to fractionalize it, turning it effectively into a security is also quite possible. They do this by creating an SPV, like I mentioned before. The SPV holds the underlying asset, the shares are issued, and finally the shares are tokenized and the tokens are distributed. ADDX, our good friends as well, they tokenized a Burgundy wine fund in France. Traditional financial instrument to some extent, physical nonetheless. And finally, SDAX, they tokenized the Global UK Social Housing Fund. Also pretty cool. Also, fundamentally a financial instrument, but once you securitize and tokenize, you end up with security tokens or tokenized physical assets. Now, there is still very valid fear, uncertainty, and doubt in this space, right? I mean, is the asset really mine? Do you know? If you have an SPV, the SPV has it somehow in a different way encumbered these assets. What are my actual rights? What if the SPV holder goes bankrupt? How prone am I to getting my money back? What is the legal structure and what are the regulatory rights within the country that has created this SPV or that hosts this SPV? Now, is the asset safe? In the case of gold, art, fine wines, or a car, is it in a place where it won't corrode, where it won't depreciate with age? Is it also in no way other ways encumbered? And finally, is the asset really there? Right, I mean, we can tokenize gold all we want. With a single entry event at the very beginning, nothing stops them from ripping open that bag, taking it out, and selling it again, right? That's the idea behind stablecoins, or at least the fear behind stablecoins is, are the assets really representative of the tokens that are underlying? Now, once you've had all of these points solved through regulation and governance, best practices, audit and due diligence, of course, well, then we're all gonna make it. WAGMI, am I right? And now these points are very key to us at KPMG because that's exactly what we do. We provide regulation and governance, audit and due dil, best practices, strategy, advisory, and all solutions to guarantee that as an issuer or as a business, you provide a product that's safe, valid, regulated, and that as a user you can go into the audit of that particular company or into the business plan of that particular company, and you can possibly find, sooner rather than later, the KPMG stamp of approval. Now, this was a bit shorter than I expected, but this is what we're trying to do here at KPMG. We're trying to provide an environment that's safe, an environment that's profitable, say, for everyone to engage in digital assets that are representative of physical assets. Now we've got a bit more time. If anyone has some questions, by all means, now or later. And if not, that was me, Karim Rafa from KPMG. Pleasure.
A round of applause once again, ladies and gentlemen, to our final speaker before we head on to a break. That was Karim Rafa, physical assets in the digital world. Okay, so we will be taking a short break for lunch, and we will be starting back at 1:30. So I'll be expecting you guys to be here at 1:30, so we can start with our first panel of discussion right after lunch. Would be women in crypto. So I hope to see you guys later on at 1:30.